Oh,
Hello?
hello.
I don't think they heard any of that.
I'm not picking up any video or audio.
Okay, there we go. I think I muted myself on accident. Sorry about that, everyone. So we are going to get started. We still have some people joining us. I'll slowly admit them in. If you can make sure that you are muted until the end when we can ask the questions. I'm Julie from Sterling Insurance Group. I have Elise next to me, and she's going to start with the introductions, and then we're going to go around and just have everybody introduce themselves before we start.
Hi, I'm Elise with Sterling Insurance Group. I'm in the personal lines department.
And then Bill, could you introduce yourself?
Yep, Bill Riegner with Sterling Insurance Group, and I'm in the Employee Benefits Department as a Senior Benefits Consultant.
And we have Kelly.
Okay, I'm Kelly Bottcher, and I'm with Sterling Insurance Group as well, and I work in our commercial department as an account manager.
And then we have Stephanie.
Hi, I'm Stephanie Grant. I'm a senior counsel with the law firm of Warner, Norcross, and Judd. I work out of Southfield, and I specialize in employee benefits law with an emphasis on health plans.
Thank you so much, Stephanie, for joining us today. So we're going to go ahead and get started, and then Stephanie will be speaking shortly. Hold on one second here while there we go. So for today, our overview, we are going to discuss the changes in the law. How does the PIP respond, the qualified health care coverage, and then also interaction with employer-sponsored health insurance. And then we're also going to discuss how to communicate that to your employees. We do have a few people that are here that are HR managers, and then that will also, answer any questions that you do have as well for personal lines.
Yeah, so to get started, Sterling Insurance and I wanted to partner together because big changes came in Michigan auto insurance law. And on the face, you say, oh, as a Michigan driver, that really impacts me. I've got these more choices now. But in reality, it also spills over into employer sponsored health plans and kind of forces employers to make decisions and think about things that we didn't have to think about before. So we're hoping that we can provide you with some good information at kind of like a high level about some of the things you'll need to consider, some of the questions you should be asking your brokers, and some of the plan designs that you might want to change in light of the fact that we've got this totally different regime of auto insurance laws in Michigan now. So as we're all aware, because I'm assuming most of us are Michigan drivers, before July 1st of this year, the law is that generally we had to carry unlimited, what they call PIP, personal injury protection coverage, on our auto insurance policies. And that PIP coverage was designed to pay for medical expenses and a lot of other things in the event that you are injured in an auto accident. That had been the regime for decades, really. So I think for most of us, we've probably never driven cars in a year that didn't have unlimited PIP under Michigan's no-fault auto insurance laws. That all changed last year when the legislature and the governor passed auto reform laws that are designed to give us more choices and allegedly are also designed to reduce our rates because, as you probably know, our auto insurance rates are pretty high, and I think you've probably read the statistics that Michigan has like the highest auto insurance rates in the nation, basically because it's driven by this unlimited PIP requirement. So prior to July 1, we were all required to have unlimited PIP coverage. That was a big cost going towards our auto insurance premiums. And as that relates to group health plans, if you had an insured plan, generally, if you had a policy written in Michigan for health insurance, group health insurance, that plan would pay primary, meaning that if one of your employees covered under your auto insurance gets into a car accident, the medical expenses would be first paid from the plan, and then anything that the plan doesn't cover would be picked up by the auto insurance. There's that coordination of benefits, as we call it, or COB. If you had a self-insured group health plan, meaning that you, the employer, took on the risk of paying medical claims yourself, usually you use a TPA like a Blue Cross Blue Shield or Priority Health to help process those claims and access a provider network. If you had a self-funded plan, you had a little more flexibility in how you wanted to coordinate. And in my experience, most of my clients with self-funded plans said our plan's gonna pay secondary. And you were allowed to do that because if you had an ERISA plan, you could preempt state insurance laws. So if you had an insured health plan, you had to go by Michigan state laws, which say your health plan pays primary. If you had a self-funded plan, you had a little more flexibility, and a lot of clients took advantage of that flexibility and said, hey, if our employee gets in a car accident, their auto insurance is gonna pay claims first, and then our insurance will come in, medical insurance will pick up anything that the auto insurance doesn't pay. And in the self-funded plan context, if you were paying secondary, at least in Michigan, if the auto insurance was paying primary for all those claims, there was really very little claims experience that the plan could process in the event that one of your employees was in an auto accident. So one thing that we're thinking is we're going to be seeing now with this new regime is that employees who are electing auto insurance that no longer includes unlimited PIP, let's say they elect like 500,000 or 250,000, which might seem like a lot, but for a catastrophic auto accident, they could go through that pretty fast. And what we're seeing is that the risk is going to shift to your health plan, especially in the context if you have a self-insured plan, and it might affect also the claims experience on the fully insured plan side, because prior the auto insurance was going to cover most of those claims, but now if your employees are selecting something other than unlimited, obviously they're going to run out. There's a possibility they could run out of their PIP coverage, and then it's going to fall onto your medical plan. And we'll kind of talk about some of the risks and some of the questions and some of the design things you might want to consider, especially in the self-funded plan context.
Great, thanks, Stephanie. And what exactly is PIP coverage? I'm sure that we've all seen this at least a few times already the past few months because it's all over the place. But as a refresher, like Stephanie was saying, historically, we've all had unlimited PIP coverage. Well, now we get to make that choice, whether it's $500,000, $250,000, or still unlimited. If you do get into an auto accident, and we'll get into the fully insured versus self-funded in a little bit, but the things that your healthcare program is not going to cover, which falls under the PIP, is the option you get to pick, is things such as in-home attending care. So things that you normally do yourself, such as bathing, dressing, making meals for yourself, all that stuff limited on your healthcare plan, but in the past, unlimited on your PIP coverage. Also, home and vehicle modifications. So if you needed a wheelchair ramp into your house, or maybe you needed an elevator in your house, or a wheelchair lift in your car, or maybe a special vehicle to get around, PIP coverage will cover that, as well as rehab services in-home and also at a rehab facility. Once you hit your PIP, if you have a limited PIP again, you reach that limit, you don't have any more rehab for really the rest of your life. Whereas if you have the unlimited option, that'll continue with you throughout your life. And there's also a lost wage. So 85% of lost wages, as well as $20 per day for replacement services. And those last up to 3 years. And that, the 85%, if you get into an auto accident and you're just driving to the grocery store or take your kids to daycare, that's where that kicks in. Now, if you're driving for work, or if you're driving a work vehicle, those things are gonna be different there because it could fall under the workers' comp at that point, or it could fall under the commercial policy, and we'll talk about a little bit that detail further. And also there's death benefits involved. So with your PIP coverage, there's benefits for dependents as well as funeral home costs. So when thinking PIP coverage, think anything besides prescription drugs, medical, so hospital visits, doctor visits, anything else that you would need if you were injured in an auto accident. And the big ones are the home modifications, vehicle modifications, and of course the rehabilitation services. The expenses of those can get eaten up pretty quickly if you limit yourself on the PIP coverage.
So what's changing, or what has changed, because now it's after July 1st, and So generally, the types of things that PIP is covering isn't changing. But what's changing is your ability and also your employee's ability to elect different coverage levels for PIP. So as you know, Bill was explaining, there's a whole laundry list of things that PIP covers above and beyond just simply medical claims that wouldn't be covered by your group health plan. And as Bill pointed out, if you're in a catastrophic auto accident, your medical bills could be pretty high. But then there's also these other things that PIP would cover. And for employees that select a lower limit than unlimited, you could eat through that pretty fast. So we want to kind of make you aware of how this kind of shifts the risk to your health plans and, you know, some of the decisions that you might want to think through as you're getting questions probably from employees about, well, what does my health plan cover? So our options now are generally most people will be able to elect to keep unlimited, to get $500,000 of PIP coverage or $250,000 of PIP coverage. There's some ability for certain individuals to fully opt out. For example, if you have Medicaid or if you're covered by Medicare or your employees are covered by Medicaid or Medicare, you can generally opt out. But for most part, at least your employees will probably be having to elect at least $250,000. Now, one thing I want to point out about that $250,000 limit is your employee themselves might select the $250,000 limit, but let's say they've got members of their household, resident relatives. At that $250,000 level, they could elect to exclude PIP coverage for those resident relatives if those resident relatives have qualified health coverage. So where an employee might be coming to you is saying, hey, I've got a 20-year-old who lives at home. I really kind of want to exclude them from my PIP coverage. I'm going to elect the $250,000 level, but hey, I need to know if they're covered under our health plan and if that health plan is considered qualified health coverage so that I can exclude PIP coverage for them. So there's a lot of options that your employees are going to be faced with. And a lot of those options will have them coming to you probably and asking, hey, what type of coverage do I have? Because the type of employer-sponsored health coverage that they have could drive some of the options that they have as they're going up to renew their health insurance.
So if we're talking about how PIP responds, if you are injured in an auto accident, we're talking about both commercial and personal coverage. If you are driving a company car that is covered by the commercial auto policy, that commercial auto policy responds. As an employee, if the commercial auto policy PIP is responding, you would want to check their limit because as Stephanie had mentioned, once that limit is used up, there is no other coverage coming from the auto policy. So if the employer did pick a $250,000 limit, that would be the limit that they would pay out for those injuries. On personal auto policies, PIP coverage follows the person. If you or your household member is injured in your vehicle, your PIP will respond. So if I'm using myself as an example, if I am driving and I have my son and my mother in my car and my mother is injured, her PIP responds from her personal auto policy. Whereas if my son was driving with her, my PIP would respond for my son as well. The order of priority also changed with the law. So the order of priority for personal auto policies now goes to your own policy responds first, your household or resident relative policy responds next, or you are limited to the Michigan Assigned Claims Plan, which is a very, very low limit that the state of Michigan pays out.
So you've heard me throw out this term qualified health coverage, and that is a new term and a new concept under the new auto insurance laws. And where it comes into play is where you yourself or your employees are electing less than $250,000 of coverage. One of the things that they need to have is quote unquote qualified health coverage. And if you think about it, the law was designed to give us choices, but the law also wants to make sure that there is some type of coverage in place that could cover at least medical expenses in the event of an auto injury. Maybe that other coverage won't cover it to the extent that PIP coverage would, but you wouldn't be left with massive hospital bills. So the law was designed to say, yes, you can opt out, but we really want to make sure that if you opt out, there's some other coverage in place. And that other coverage that they're looking towards is called qualified health coverage. So qualified health coverage would be either Medicare Parts A and B, or health coverage such as your employer plan that both does not exclude coverage for auto injuries and has an individual deductible of less than $6,000. So where this would come into play specifically with your health plan and your employees is, let's say you've got an employee who is seeking to elect that $250,000 level, but they want to exclude members of their household like their spouse from PIP coverage under their policy simply because their spouse has employer provided coverage. Now, in order for your employee to exclude their spouse from their own PIP policy, you'd have to show that that spouse is covered under qualified health coverage. Maybe the spouse is a dependent on your plan, or maybe the spouse has their own employer-sponsored plan. What they'd have to show is that employer-sponsored plan or your plan that covers that spouse doesn't exclude coverage for auto accidents and has an individual deductible less than $6,000. So if either of those two conditions aren't met, it won't be qualified coverage, meaning that that employee, in my example, wouldn't be able to select no PIP coverage if they, in this example, I said they're looking for the $250,000 level. So that's, we wanted to kind of make you aware of this term qualified health coverage because my guess is that employees are up for their auto insurance renewal. They're going to be asking this question because they might be looking to save some money and see where they could either exclude people from coverage or select lower levels of coverage. They're going to be saying, hey, I'm covered by my employer's health plan. Is it qualified health coverage? And also, if your employee obviously is covered by Medicare Parts A and B, likely they're not covered under your own plan, but Medicare Parts A and B would also be considered health coverage that would allow someone to elect a limit lower than that $250,000.
You may have employees too that are on Medicaid. Can you go back one slide, Julie?
That's a good point, yeah.
Yeah, if you have Medicare A and B, that is qualified, but employees or really anybody with Medicaid, that is not a qualified health plan.
That's a good, yeah. Medicaid would allow them to get like at least the $50,000 level, but Bill is right. Medicaid is not considered a qualified health plan. So again, how does this interact with your employer-sponsored plan? Because that's sort of what we wanted to design the program about is, and it kind of depends on if you have like I talked a little bit in the beginning, if you have a fully insured plan or a self-funded plan kind of dictates what your options are. And if you have a fully insured plan, meaning that you pay a premium every month to Blue Cross Blue Shield of Michigan, let's say, and then if there's a health insurance claim, Blue Cross Blue Shield of Michigan is paying that claim. That's what a fully insured plan is. A self-funded plan is a type of health plan where the employer itself is assuming the risk to pay those medical claims. So while they might engage, for example, Blue Cross Blue Shield of Michigan as a third-party administrator to process the claims and to access a provider network, really who's the person cutting the checks or the entity cutting the checks for any kind of medical claims is the employer itself. And there's different reasons to have a fully insured versus a self-funded plan. In my experience, self-funded plans are a little more attractive probably to larger clients because your risk pool, simply because you have more employees, is more spread out. And as we kind of know, insurance is all about risk and kind of spreading out the risk among the pool. And also self-funded plans are kind of attractive to in other ways in that there's a little more flexibility in them, a little more flexibility of design, and especially if you have an ERISA covered plan, which most private employers are covered by ERISA, you get kind of greater flexibility, meaning you don't have to really meet any kind of state mandates like you would if you bought a fully insured product. So if you have a fully insured plan, not a lot is changing for you. That plan will still pay primary. We still are subject to the laws under the state of Michigan. Bill and Elise, you can correct me if I'm wrong, but at least in Michigan, I'm pretty sure you can't buy a policy, a group health policy that totally excludes auto accidents. Is that right, Bill?
Yeah, for the fully insured groups.
For fully insured group.
Yep.
Yeah. So really the only way that you could not be considered qualified health coverage if you have a fully insured plan is if you have a plan with a really high deductible, which is probably very atypical. I don't see many, at least my clients who have fully insured plans whose deductibles are high, individual deductibles higher than $6,000. So not a lot is changing in that regard. You still should be aware of whether your plan is qualified health coverage or not, because you're still going to probably be answering questions from your employees about whether it's qualified health coverage or not. But really, because it's a fully insured plan, the plan itself the insurer, like a Blue Cross Blue Shield or Priority Health, is the one insuring the risk and taking on the risk in connection with this new auto reform. If you have a self-funded plan, there's a little more considerations for you guys. The options for self-funded plans are, do you want to keep your plan as qualified health coverage, which would mean that employees could potentially for themselves or their dependents covered under your plan, potentially select low limits of PIP coverage other than unlimited. In that case, as I explained earlier, there might be a risk shift. Prior in the no-fault auto regime where we all had to have unlimited PIP, generally in a self-funded plan context, the plan would say it pays secondary to your auto policy, meaning your auto policy is basically going to pay all the claims associated with that auto accident, and there'd be very little, really, if any, medical claims for the your health plan to pick up. Now we've got the regime where you're allowed to, we as individuals and your employees are allowed to elect something other than unlimited. That could shift the risk to your self-funded plan. So you want to think about, do we want to continue to be qualified health plan? Do we want to exclude coverage from all auto accidents? I do have one client who is a self-funded plan who, even prior to auto reform, across the board just said, our plan, we will not pay any medical expenses for injuries or arising out of an auto accident. A little bit of an extreme case, but that's from a business standpoint and a employee PR standpoint, that's what worked best for them. I've seen other self-funded clients who are taking the position that one, they're going to continue to pay secondary, but they're going to impose like a $500,000 limit, meaning that if you're in an auto accident, even though we're going to pay secondary, we're still not going to cover the first $500,000 arising from an auto accident. And the thought is if that is put in place, it'll force employees to elect at least $500,000 in their personal auto claim to kind of cover that gap. That's one plan design. One thing we're seeing in the self-funded plan context with that partial exclusion is some TPAs I'm seeing aren't just set up to administer it. Not that they legally could administer it, but like their software or just their processes aren't put in place to process those partial exclusions, as we call them. So just kind of some thought as you're thinking about if you have a self-funded plan and you're thinking about ways to redesign your plan to reduce the risk that the plan might have to pay for some catastrophic medical claims from an auto accident, which wasn't a consideration that you had to think about before. Those are some of the design options that we're seeing or who's my clients explore.
Yeah, just kind of recap what Stephanie was saying about the plan. So 60% of adults in the state of Michigan are covered by group healthcare plans. And of those, you're going to fall under either fully insured or self-funded. And it's right around 50% of those 60% on the group healthcare plan are on fully insured plans, and then the other 50% are on self-insured plans. So going back to the fully insured, yeah, nothing's really changing there. The healthcare carrier is still going to be the primary on that, with the auto being secondary. But the self-insured plan, so our groups are doing very similar thing. We've also, most of our groups have gone the $500,000 route where they're secondary So they're not going to pick up any of the medical expenses associated with an auto accident until the expenses reach $500,000. And what's super important in this area is to communicate that to employees, because if the employees go in and elect the $250,000 option, well, there's a gap between that $250,000 and $500,000. That if you're not telling them, they're not going to be aware of that. It's going to be a big shock to them. And also on top of that, we have not had any of our groups exclude auto accidents, although that is an option. I have heard of a few other groups that have done that, but we're not advising any of our groups to do that. And when you look at the fully insured and even the self-insured plan, now that the PIP is an option, right off the start of an auto accident, the first thing that's going to happen is an employee is going to get a bill in the mail from the ambulance provider going to the hospital, and with a letter asking for their healthcare insurance plan. And previously that wasn't an issue, that the healthcare carrier and the auto insurance carrier, they coordinated, they worked out the payment schedules together, and the employees typically saw their deductible or their copays, that was it. Well, now they're still going to be seeing those same bills, but if they elect not to take the PIP coverage, then things like ambulance services, right off the bat, the employees are responsible for. So again, no decisions the employer needs to make on the fully insured plans, but on the self-insured plans, they need to decide if they're going to be primary, secondary, or exclude it, and make sure to communicate to the employees the decision that they made, so the employees can set up on their personal auto policies to make sure they don't have any gaps in their coverages. What does my healthcare have to do with my auto insurance? Well, as you can see, it has a lot to do with it now. The deductibles and the copays. Historically, the PIP coverage would eliminate deductibles and copays for employees. Well, now they're responsible for that. And also, if the employee does not have any PIP coverage and they're in a catastrophic auto accident, they're not able to work, well, eventually their group healthcare insurance is going to run out. And depending on the severity of the accident, the COBRA may be 18 months up to 36 months. After that, the employee's not going to have any healthcare coverage. So if they selected a limited PIP amount, or they selected no PIP coverage at all, well, now they don't have any healthcare insurance as well. So yeah, the employees, and the first thing that the employees will do too is they'll come to the HR manager and they'll ask if it's a qualified healthcare plan. And so what the employees, what we're recommending the HR managers do is to reach out to, or have the employees reach out directly to their healthcare carriers and ask for the letter directly from the carrier, telling them if it's a qualified healthcare plan or not. Then they're able to provide that to their personal auto insurance agent to make the selection for that.
When it is time to call the personal auto insurance agent, I just wanted to add for any employees that we have, that does need to be replaced or increased within 30 days. If, for example, you waive coverage on your personal auto insurance and it is not increased within 30 days of losing that private health insurance plan, you will no longer have coverage. So.
Yeah, I think that's a very important, both Bill and Elise, you talked about very important points about, even though you think that auto insurance, personal auto insurance, how does that affect, my employer and my health plan that I offer my employees? They actually interact a lot more than you think, and a lot more now than they did under the prior law regime. And as Bill pointed out, one thing that your auto broker, your personal auto broker, or your employee's personal auto broker, as they're going through the options, they're gonna ask, do you have qualified health coverage? And then your employee is gonna turn to you and say, hey, do we have qualified health coverage? And the Michigan Department of Insurance and Financial Services, or DIFS, has instructed both carriers, and carriers also include employers of self-funded plans, to say, hey, you have to provide a letter stating whether or not your coverage is qualified health coverage. And there's, in this slide here, there's certain specific information that has to go in it. So if you have a fully insured plan, your carrier is going to be providing that letter. So as Bill said, you can either, you as the employer can either direct the employee to the carrier itself, or possibly you can kind of get that information from the carrier on behalf of the employee and kind of pass it along. But that letter of whether it's qualified health coverage in the fully insured context is going to be coming from the carrier. In the self-funded context, maybe your TPA will help you put that letter together, but ultimately the responsibility of providing it is falling it to you as the employer. So I've worked with several of my self-funded clients to kind of put a template letter together to give their employees in the event that the employee comes, because they will if they're in Michigan, and asks, hey, I'm going through my personal auto insurance coverage options. I need to know whether or not I have qualified health coverage or not. And then you can kind of pass along that letter to them, which will say that they can then turn over to their personal auto agent.
The questions to ask health insurance provider, like Stephanie was just saying, is it a qualified healthcare coverage? And employees can call their healthcare carriers, or HR managers can get that document from healthcare carriers and distribute that to employees. And also, does the plan restrict or limit auto injuries? As we were talking before, the self-insured plans, which about half of them are that, they can exclude those, or they can be secondary. Now, even on the fully insured plans, although they can't exclude auto injuries, or they can't be secondary, they have to be primary, each plan and each carrier handles them differently. So it's important that employees understand the different costs associated with their particular plan as associated to injuries in an auto accident. And how much coverage does health insurance provide for injuries sustained in auto-related accidents? Again, different plans provide different limits. But if you waive your PIP coverage, you're now relying 100% on your healthcare plan, which, going back to what all PIP covers, healthcare plans don't cover any of that. So you're really limiting yourself to just medical and prescription. If you're catastrophically injured in a car accident, does my health insurance plan cover attendant care? Most health plans may not cover it, but again, PIP does cover it. And if you select the unlimited, then of course you'd have unlimited coverage in that area.
Yeah, so you know, Bill brought up a bunch of really good points, and I think it all goes down to having to communicate these changes to your employees. Not only are we educating ourselves as we're going through our own auto insurance renewals, and you know, me personally am looking at what type of coverage would be best for my family and my situation. You really should be communicating things to your employees, and I think a big piece of communication is emphasizing sort of what your health plan covers and what PIP covers, and kind of highlighting the differences. Because I'm finding, as I talk to the HR folks that I work with at my clients, that a lot of employees think that PIP is just medical. So one thing that we've been stressing is, you know, communicating to employees as part of the onboarding process, is almost as part of your open enrollment process as well, is kind of communicating to them, yeah, you might be able to opt out of PIP coverage for some of your dependents because we're a qualified plan, but hey, you know, our plan won't cover attendant care. And also, if you leave our employment, you know, you're no longer going to have our health coverage unless you elect COBRA, and COBRA is even limited in duration. So those are kind of the things we're seeing, or we're encouraging employers and HR departments to kind of add as part of the overall employee kind of education that you go through. So communicating to employees about changes and how their auto insurance will interact with your employer-sponsored health plan is, if you are not a qualified health plan, and remember, your plan won't be considered qualified if it either excludes coverage for auto injuries, or it has a individual deductible higher than $6,000. So if you meet one of those two requirements, you are not going to be considered qualified health coverage. you're going to have to emphasize that employees have to elect at least $250,000, and they'd have to elect that $250,000 limit. They couldn't waive it for anyone in their household or any of their dependents. And also communicate to them that, as both Elise and Bill pointed out in some of the slides, is that your new employees might have to change their coverage. They might be going, their prior employer was considered qualified coverage. So they were able to select the lower limit or even waive it for some of their family members. If they join your plan, that's a big change. They're no longer covered by a qualified health plan. And as Elise and Bill emphasized, they have to notify their carrier or their auto carrier within 30 days, or they could be without any kind of coverage. So those are types of communication pieces that we're kind of encouraging our employers to emphasize. And if you do have qualified health coverage, meaning that your plan doesn't exclude auto injuries, and it has a deductible that's lower than $6,000 or an individual deductible, we're encouraging those employers to emphasize that PIP medical coverage and PIP coverage is much broader. You wouldn't think that it's your duty as an employer to kind of educate employees about their auto insurance, but because the auto insurance is now a lot more tied to employer-sponsored health plan than it was in the past, that's just one of the educational pieces that we're really kind of encouraging employers to take. A lot to kind of go through, a lot of changes to talk about, both on a personal level, because we're making these decisions for ourselves, and also kind of on the employer level, because there might be some decisions that you have to make about your own employer-sponsored health plan.
Yeah, as far as the impact goes, most of the carriers, they're not 100% jacked because it just started, but they foresee a very minimal rate increase because of this. I mean, in the past, it was still coordinated, so the healthcare carriers are still picking up a big tab on fully insured plans for auto accident-related injuries. So they see a minimal increase there, and then for self-insured plans, the auto accident injuries, it would still hit the specific deductible for each employee. So again, they're foreseeing a minimal increase in costs there as well.
Yeah, and Bill brings up a good point, is that if you do have a self-funded plan, you might want to take a look at your stop loss coverage and make sure that those limits align with the potential increase in risk. So maybe you want to lower your specific or individual threshold under your stop loss policy in order to kind of account for this potential increase in risk. Now, knowing that some employees might be able to take unlimited or something other than unlimited PIP, which could expose your health plan to greater costs than it did in the past. So take a look at sort of what your stop loss thresholds are too. Talk to your broker about that as well to kind of see if there's anything that you would want to change or would need to change to kind of address the risk to the plan in that instance too.
And the last thing I'll say on the self-insured plan, if a group does decide to exclude auto accidents, which they can do, by law, they cannot require their employees to purchase PIP coverage. So there could be a massive gap there for employees. So if groups do decide to go that route, it's really important to communicate effectively to employees. And really any self-insured plan, employees in open enrollment meetings, like Stephanie was saying, is a good time to do that. Make sure employees understand where their limits are on the group healthcare plan so they can plan accordingly on their auto policies.
I believe that was our last slide. I'll double check. Yep. So does anybody have any questions they would like to shoot in the chat box, or if you want to unmute yourself, we can ask them.
Yeah, it seems like if you get rid of the PIP full coverage as far as unlimited, the cost isn't much different to go to $500,000 per vehicle.
And you're talking on the personal auto policy or in the commercial?
I would tell you on the personal auto policy, I think that's where the folks are a little bit not understanding. It's not they're going to see a savings no matter what with the MCCA changing at $120 per car. So they're going to get a savings no matter what. It's just, I think that the loss of trying to give up more the risk reward's not there. As Bill mentioned, the coverage you get with the unlimited is so much greater for that little bit of difference.
Absolutely. The trends that we've been seeing is, although it's nice to have the incentive to choose your option, you're losing a lot of coverage for not saving enough money. For example, I just did one yesterday that to go from unlimited to 500,000 on her personal auto policy only saved $20 per year. And that you're giving up a lot of coverage as far as an unlimited lifetime benefit to limiting yourself to 500,000 for $20 a year.
Okay, we have a couple questions. It looks like I have somebody who raised their hand, so I'm going to unmute you and you can ask your question. Maybe. Did it work? Hello? Maybe not. Okay. So we're going to go to the questions that are in the chat box. I have a question in here. It says, in case an employer decides to restrict auto accident coverage, are they required to communicate it to their employees ASAP?
I can handle this one. If you were making that change other than at mid-year, yes, you would. And in some instances, I would even say you'd have to give advance notice before that change can take place. Because if you, I'm assuming you have an ERISA covered plan, meaning that you are a private employer with a group health plan for your employees. If you're covered by ERISA, ERISA requires 60 days advance notification for certain significant changes. We've been kind of on the side of erring that this requires an advance change because it is so significant, because you're excluding an entire class of injuries that wouldn't have medical coverage. Probably from just an administrative standpoint, it might be, if you've got a January 1 renewal, it might be easier to make the change at renewal, because then you kind of take away that advance notification. And if you're planning on making the change for your upcoming plan year, that would coincide nicely with, for example, your open enrollment period. So as part of your open enrollment communications, you could also communicate the change there and to alert employees that effective January 1, no auto insurance will no longer, or coverage for auto accidents would no longer be covered under your employer-sponsored group health plan. So yes, if you're going to make that change mid-year, you really have to notify the change as soon as possible. From an administrative standpoint, it might be just easier to do it at your next plan renewal.
Okay. I do have a couple more that just popped in. One question is, how do I know what my policy coverage is? Under PIP, it only states medical $300 deductible.
Yep, so on your personal auto policy, if it only states PIP, more than likely your policy started before the law went into effect, and you do still have that unlimited PIP coverage. The law went into effect 7/2, but if you make any other decisions to change that PIP coverage or just bring it into the new rates, you do have to sign state forms. So generally, if your personal auto policy started before the law changed, you still have that unlimited PIP that was applicable. Also, at each renewal, you will get state forms that you need to sign. Even if you want to keep unlimited PIP, which we've been seeing a trend that it is lower premium at the renewal, you will still have to sign those forms every renewal.
Okay. And then if I am in an at-fault accident and the other driver does not have unlimited PIP, how does it affect me?
This is one of the kind of hidden things that we talk about in the law, and one of the reasons that our agency also suggests to increase your liability limits. If you are in an at-fault accident and the other driver either has waived their PIP, has no health coverage, or has that very, very limited coverage, and their medical bills go beyond any limits that they have, since you are at fault, you are now liable and they can sue you to pay their medical bills. Those would come out of your bodily injury liability limits. It would not come out of your PIP coverage. It would come out of the liability. That's why we at the agency are suggesting you also increase your liability to at least $250,000 per person and $500,000 per accident, as well as look at possibly an umbrella policy to have extra liability that saves you from personal suits.
Perfect. Do we have any other questions? It looks like I have a couple people that raised their hand. Do you want to enter your question in the chat box, or if you wanted to send me an email, we can get that answered for you. Does anybody else have any other questions? Okay, we did get one more. It says, is PIP only a component impacted by auto reform? Is PIP the only component impacted by auto reform?
PIP is the largest component impacted by auto reform because it's the first time in decades that we're having the ability to choose the level of coverage that we get for that PIP coverage. There are other aspects, as I spoke about previously about the liability, there are other aspects that are impacted. Some of which have to do with your liability limits as well. So,
if you'd like, you can send us an email. We can discuss further on the other things that have changed due to the law. If you do have any other questions, looks like we do have some more questions that popped in. One of them is, what about an uninsured passenger's medical or auto? I'm assuming that you're suggesting if they got into an accident and there was uninsured passengers, what would that fall under, medical or auto?
sure. So if you get in an accident and you have a passenger in your car that's completely uninsured, that passenger would have that limited coverage that's provided by the state, which is the last order of priority that I spoke about. As far as the auto, in the state of Michigan, everybody is responsible for fixing their own automobile. So that would be your decision as to whether you need to make a claim on your policy in order to fix it to your deductible.
And then as a reminder, we will be sending out this recording for anybody that came in late or had to leave early, and then we also attach the PowerPoint. Does anybody else have any further questions? I am not seeing any more of the popping in the chat box, and if you do have any questions, you guys can also email us. Check us out on the web. I want to thank Stephanie for always filling us with your knowledge, and then thank you also Kelly and Bill and Elise for joining me on this webinar. We hope that everybody has a great day.
Thank you.
Great, thanks everyone.
Thank you.
Thanks a lot.